Hello viewers, another attractive IPO, Adani Wilmar. The subscription started today, 27th January. The first day itself, 58% of retail subscriptions for Adani Wilmar. So, shall we apply or not? There is a big question in front of us. Let us do their IPO analysis, business details, and then we'll compare their fundamental analysis with their peers. Then we'll see the experts' opinion, what they are suggesting, whether we'll apply or not. Welcome to our channel, Stocks in Silence. We are providing pre-market report, IPO analysis, and then valuable stocks for long-term investment. Yes, let us analyze Adani Wilmar. Adani is Indian-based company, Adani Enterprise. Wilmar is Singapore-based company. Adani and Wilmar joined together in 1999 and entered in FMCG business in the name of Adani Wilmar. They are in majorly three business: edible oil, industry essentials, and packaged food. So edible oil business constitutes around 65% of the total sales. Majority is soybean oil. Industry essentials constitute 25% of the total sales. Castor oil is a major one. Packaged food around 11% of the total sales. Wheat flour is a major one. So they have 22 manufacturing plants across 10 states in India. Apart from 22 manufacturing plants, they have 36 leased tolling units. Fortune is their flagship brand. Everybody in India they knows. Adani Wilmar ranks first in soybean oil and mustard oil, and they are the largest manufacturer of stearic acid and glycerin in financial year 2021. As of financial year 2020, Adani Wilmar was the largest exporter of castor oil. So their CAGR growth in packaged food is expected to grow around 11%. Edible oil expect to grow 7% CAGR till 2025. So this is their business details. Now we'll understand the IPO details. As usually, the reason to come for the IPO is they want to expand their business, to fund capital expenditure and acquisitions, and finally they want to reduce their debt. So these are the main reason why they come for the IPO. The IPO size is 3,600 crore. It's a fresh issue. The price band is 218 to 230. The minimum is 218 and maximum is 230. Please remember, always you apply with higher price band. And subscription date is today, that is January 27, already started. It's going to be end on Monday 31st January. So we'll see their fundamental analysis. ROE is 22.3%. Revenue is 45,776 crore. Profit after tax 741 crore. Post IPO promoter holding is 88%. Post IPO market capital is 29,888. The debt, total debt 1,944. Post IPO net worth will be 7,251. The PE ratio is 40.4. PB ratio, book price to book ratio is 4.1. The retail allocation is 35%. So this is the IPO details. Now let us understand their fundamental, whether they are strong or not, and then we'll compare their peer business people. You know that in FMCG business there are many competitors. HUL, Hindustan Unilever, they are the major FMCG business in India. Then Ruchi Soya, Nestle India, Britannia, Tata Consumer, Dabur, Marico, Imami. These are the people are high competitor to the Adani Wilmar. So their PE ratio when compared to peers, yes, it is lower, 40.4. The highest PE ratio in their peer is around 80.4 for Nestle India, 88 for Tata Consumer, and Dabur is 53.3, Britannia is 53.2. So when comparatively their PE ratio is low. Another one is PB ratio. Adani Wilmar PB ratio is 4.1. That is the lowest among all peers. So in terms of PE and PB, it looks attractive. and then we'll analyze, we'll ask some fundamental question. The first question is, are the companies earning before tax more than 50 crore in the last 12 months? The answer is yes. Their earning is 829 crore. It is definitely more than 50 crores. So their business is good. The next question, does the company have the credible moat? The answer is no, because this business can start anybody and anytime. They don't have any moat in this business. The third question is, do promoters hold more than 25% stake in the company? Absolutely yes. They are going to hold 88% in that stake in that company. It shows their confidence in this business. Always remember that if promoters holding is high, it looks that they have more confidence in this business. So in that way, they are going to hold 88%. It shows a good potential growth for this business. The fourth question is, do the top 3 managers have more than 15 years of combined leadership at this company? Why we are asking this question is, we should understand the leadership and then their association with their company, because in many of the business will stuck or may change or may go low, depends on the leadership. So in that way, the CEO and managing director Angshu Malik is associated with this Adani Wilmar since 1999, so more than 15 years. Absolutely, in that way also is a good. The fifth question is, was the company's operating cash flow positive during the last 3 years? Yes, based on the report, they have shown the best operating cash flow. The sixth question is, did the company increase its revenue by 10% CAGR in the last 3 years? Yes, we have seen that the CAGR is consistently increasing, more than 10%, we can say. Have the company's seventh question, have the company's short-term borrowings remained stable or declined? This question is yes, the short-term borrowing, it's not stable, it's increased. That's one negative point I am seeing. When I see the data, around 16% it's increasing from 1999 to 2020. So their borrowing is keep on increasing. That's a small negative point. The eighth question is PE ratio, and ninth question is PB ratio. PE ratio and the PB ratio, when compared to the peers we have discussed, it looks very attractive. And finally, we'll see about that other brokerages, what they are suggesting about the Adani Wilmar, whether we'll subscribe or not. There are many brokerages, KR Choksi, Angel One, Choice Broker, Arihan Capital, Investments. All the people are there suggesting to subscribe based on their fundamental business, based on their potential for growth in the business. So HDFC Securities, they didn't rated, they don't want to rated. So finally, let us understand as an individual what are the positives and what are the negatives. So first we will see the negatives. The first major negative point is the borrowing keeps on increasing, the debt is slightly high, so that we have to keep in mind. The second is their major business is depending on the edible oil. 65% of their total sales is depend on the edible oil business. Third one is their raw material is, majority of the raw material they are importing from other countries. So in terms of any import restriction by other countries, it will affect their business. And they don't have any long-term agreements with the supplier of the raw materials. So suppose if suppliers are not ready to supply the raw materials, definitely the business will affect. The last one is, this is high competitive business. There are many players are in this field. So these are the negative points in my mind. When we go to the positives, they have many positives. Yes, they have the strong management team. They can manage and they can bring up to the any level the business. They have a very good track record, and they have strong research and development team to make a new product to address the issues. And they have extensive pan-India distribution network, in the sense like they have a strong products available across all major e-commerce platforms. If you see any e-commerce platform like Flipkart, Amazon, Big Basket, any e-commerce platform, you can able to order their products. They have a strong network. They have a strong flagship brand, Fortune. That is a major positive for them. Everybody knows the name Fortune. They already reach the people. They have a broad customer reach. So these are all very strong positive for the company. So already in the first day itself, 58% retail subscription has happened for this IPO. So the overall, it looks very attractive. Personally, I am going to apply. I could not able to suggest. Based on the data, you can decide, but overall it looks attractive. Such a good video, please subscribe to Stocks in Silence. If you like this video, put on like. If you have any comment, please comment. Thank you.